Hello everyone. Welcome back to Wealth Mama. Today's market was all about volatility, profit booking and cautious sentiment, with Nifty ending in the red for the day. But the fall isn't as straightforward as it looks. There's an interesting story behind it. In this video, we are going to decode Nifty's full movement for the day, the global and domestic factors that triggered the downfall, the strongest and weakest stocks, sector-wise performance, India VIX's sharp spike, support and resistance levels, and finally, a complete prediction for tomorrow's market based on all factors. Let's get started. Nifty opened at 26,109.55, which is lower than the previous close of 26,192.15, signaling a negative sentiment right from the start. In the first half, Nifty attempted to move higher and touched an intraday high of 26,179.20, but it faced heavy resistance at upper levels. That rejection became very clear as the index began to slip gradually throughout the session. Eventually, Nifty made an intraday low of 26,052.20 and closed at 26,068.15, down by 124 points or around 0.47%. What's important is that Nifty stayed in a tight selling channel for the entire second half, indicating consistent supply at higher levels. Why did the market fall today? Weak and uncertain global cues. Global markets were broadly weak today. The US futures were indicating volatility due to uncertainty around the Federal Reserve's rate cut timing. Dollar strength and rising US bond yields added pressure to global equities. In Asia, several markets were trading flat to negative due to weak macro data points from China and continued concerns over global demand. This created a risk-off mood across emerging markets, and India felt that impact. Profit booking and rupee weakness in domestic market. The Indian rupee hit new weakness levels against the dollar, which spooked short-term investors. Additionally, after multiple days of strong upward movement earlier in the week, traders used today as a profit-booking session. This was particularly visible in sectors like metals, PSU banks, and capital goods, which all came under noticeable selling pressure. The advance decline ratio was also weak. 17 stocks advanced, while 33 declined, showing clear market-wide softness. Sector-wise performance. Let's talk about the sectors. The weakest sectors in today's session are metals. The stocks are under heavy selling due to weak global commodity sentiment. PSU banks saw the profit booking after previous rallies. Realty and capital goods also faced pressure as bond yields in global markets rose. Auto and metals suffered due to global cues and demand concerns. Mixed mild weakness. IT stocks saw mild pressure since they've rallied recently. Private banking was mixed, with Axis Bank, ICICI Bank under pressure. Strong, resilient sectors. Despite the overall fall, some sectors showed resilience in today's session. The FMCG sector, consumer-oriented stocks, airlines and auto sectors performed good. This sector rotation shows that markets are pausing and not reversing the trend. Now let's take a look at today's top Nifty gainers. Even on a weekday, some stocks performed exceptionally well. Maruti Suzuki up by 1.32%. Due to strong festive demand, improved sales outlook, and stability in input costs supported the stock. Tata Consumer up by 0.90%, with positive sentiment ahead of new product launches and consistent growth in packaged foods kept investors interested. Max Healthcare increase of 0.87% as the healthcare stocks remain defensive today. Stable earnings and sector confidence supported the stock. Indigo with an increase of 0.86%. Due to lower jet fuel prices and robust travel demand kept aviation stock strong. M&M has increased by 0.82% with good rural demand outlook and positive auto sector cues supported the stock. Other notable gainers included ITC, Asian Paints, Infosys, and Hindustan Unilever. The following are the several heavyweight stocks that dragged the market down today. Hindalco declined by 2.81% and the fall was sharply due to weakness in global metal prices and poor sentiment around Chinese industrial demand. JSW Steel lost 2.91% because the metal stocks faced heavy selling after global steel futures remained under pressure. Tata Steel also lost 2.59% due to same global concerns and the profit booking added more pressure. Bajaj Finance declined by 2.29% as we have witnessed profit booking after recent strong performance. Higher yields also hurt NBFC valuations. HCL Tech lost almost 2.22% as the IT index cooled after recent strong rally. Global macro uncertainty affected overall tech sentiment. Other losers included Reliance, HDFC Bank, Kotak Bank, State Bank, and Dr. Reddy. Let's check the volatility in the market. Today's India VIX jumped 1.49 points, which is a massive 12.27% increase. This spike is extremely important. And here's what it means. Traders are positioning for uncertainty in the near term. Option premiums jumped. Fear of sharp swings, both sides, increased. Volatility signals that markets may expect directional movements soon. A double-digit spike in VIX usually precedes either a meaningful correction or a sharp reversal rally. So next session opening will be very crucial. Let's now look at the key levels for tomorrow's session based on the pivot points. Support 1 is placed at 26,020. This is the first defense level. If Nifty opens above this, bulls have room to build momentum. Support 2 is placed at 25,973. This is the critical level. A break below this signals increased selling. Potential drop toward the 25,900 to 25,850 zone and higher volatility ahead. While on the upper side, resistance is at 26,147. This is the first hurdle. If Nifty crosses this, a recovery rally toward 26,226 is likely. And the resistance too is placed at 26,226. Crossing this level with volume will invalidate today's weakness and possibly trigger short covering, renewed bullish sentiment and test of 26,300 zone. These levels will define whether tomorrow is a recovery day or a continuation of today's correction. After considering today's selling pressure, global weakness, India VIX jumping 12%, profit booking across metals and BFSI, strong defense in FMCG and healthcare. Nifty closing near support 1. Weak advance decline ratio. Here's the predictive outlook. If Nifty stays above 26,020, we can expect a pullback towards 26,147. If global cues stabilize, Nifty may attempt 26,225 to 26,250. And defensives like FMCG, Pharma, IT may lead the market. But if Nifty breaks below 25,973, we can expect further weakness. Metals and banks likely to extend selling. Index may test 25,900 and VIX could continue rising. So the most probable scenario for Monday's session would be a range-bound but volatile session, with a bias toward recovery if global cues do not worsen overnight. And that wraps up today's complete Nifty market breakdown for 21st November, 2025. If you found this analysis useful, do hit the like button and subscribe to Wealth Maama for daily simplified market insights. Comment below if you want me to cover Bank Nifty or top stocks for swing trading in tomorrow's video. Thank you for watching. I'll see you in the next update.